The broadcast is now starting. All attendees are in listen-only mode.
Good afternoon, everyone, or good morning if you're out on the West Coast. My name is Todd Rich. I'm the head of education here at Nadex, and I'm going to be taking you through a presentation today. We're going to be doing it a little different than we normally do. I do have some slides I'd like to share up front. Particularly, I find that they're beneficial for those folks who review these sessions. We do record all of these, and they are posted to the webinars section of our website, which I will show you. We also put them up on YouTube, the Nadex channel, and I would highly encourage you to subscribe to the Nadex YouTube channel so that you can always stay up to date with whatever video content that we put out there. I do want to get going this morning right on time because we've got some things I'd like to cover. Before I get going, let's do this. I do have to go through a little housekeeping item. This webinar, as are all of our webinars, are sponsored by our compliance department. And it is important that you read this disclaimer. So I'm going to leave it up here for a second, but I'm going to highlight the salient points. The salient points being one, trading involves risk. Number two, all trading decisions are solely your own responsibility and done at your own risk. And then three, which I'd really like to point out, is I am going to be showing some live markets. We're in the demo environment, but they mirror our live markets. I do not want you to take anything I say today as a solicitation to buy or sell anything. I am doing this strictly for your educational benefit. All right, with that, here's our plan today. I'm going to go through a couple of slides. Again, I like these slides. They're pretty short, they're straightforward, but if you're brand new to binary options or brand new to knockouts, I think they define the products pretty well. But then after we do that, I am going to jump over to the platform. And we are going to walk through our new platform experience, and I'm going to go through some examples of binary options and knockout options. Again, they will be in our demo environment, but our demo environment does pull in data feeds from the live environment. So it's not always the exact same trading experience, but it is live data, and I don't want you to take anything I say as a buy or sell recommendation. The other thing I'd like to point out is there is a questions function there on the GoToWebinar. You could type questions into me. Unfortunately, today, my colleague who would normally be backing me up and typing in answers to those questions, she's out on holiday. It is that quiet time of the year, right? It's the end of summer, which I still can't believe. It boggles my mind that we're coming up on Labor Day. But I will keep an eye on that questions box, and at the end, I will most certainly bring it up and try to go back and answer any questions that I may have missed along the way. So by all means, please. And if for some reason you are having sound issues, we are delivering this over the internet, and you can usually solve that by refreshing your browser. Hitting F5. So just wanted to point that out. This is being delivered over the internet, and if you have sound issues, please refresh your browser. And again, we are recording this, so you'll always be able to go back and play the recording. All right, so let's jump into the thick of it. Is there anything else I wanted to cover in terms of housekeeping items? Type in your questions. It is being recorded. YouTube channel or the archive section of the Nadex website under webinars, which I'll show you. I am going to point out because it is the slow season. We're not doing webinars next week, but I would encourage you to, if you want to review some content, please see what we've got posted on our webinar section in the archive or on our YouTube channel, and there's plenty of content there for you to learn from. And then the week after that, I am going to tease it out there. we're going to be doing a 3-day virtual education summit with our sister company, Daily FX. And it's going to be it's going to be 12 hours across the course of 3 days. It's totally free. You'll be seeing invitations for that probably next week, but we're going to be promoting it for a couple of weeks. And I would encourage you to, join us. It's going to be a great education summit. So I wanted to tease that out there. Be on the lookout for it. Let's get into it. What are binary options? So a couple of quick slides just to go through some definitions. Again, this is for people who just simply don't know. And when you're reviewing this, it does help to have some notes in front of you before we jump over to the platform. Binary options are short-term defined risk reward contracts. They're really geared toward a retail trader. Now, what is that short-term defined contract made up of? It's got 3 components. There's an underlying market, and at Nadex, we've got binary options on indices, global indices, as well as the broad market indices here in the United States, like the S&P 500, the Dow Jones, the Nasdaq, and the Russell 2000. We've even got underlying contracts on commodities like gold and silver and crude oil and nat gas. We've got binary options on foreign exchange pairs. We even have some event contracts around economic numbers and announcements. There's a variety of markets that we've got. Then there's a condition. And now that condition is sometimes referred to as the strike price or the level. And then there's a time. We mentioned these are relatively short-term contracts, and these can be from 5 minutes to weekly contracts. So there's a variety of choices in there. And it doesn't matter whether you're buying or selling a binary option, and you can sell it. You can buy it, you can sell it, you can take either side. It doesn't matter. It all depends on what your opinion is. Whether you're buying or selling, there is totally defined risk, totally defined reward. Okay, so you know what the potential opportunity is before you even get into the trade. And they trade between 0 and 100, 0 being the floor and 100 being the ceiling. Now, what is it that you're trading? And it's a true or false question. It's a prediction. Either the event is going to happen or it's not. So for an example, will the S&P 500 close above 3850 at the end of the week? Yes or no? And I think people are generally familiar with that kind of a concept. You're making a prediction. Is this event going to happen or is it not going to happen? And in the end, if the question is true, so is the S&P 500 going to finish above and it settles above that level, it will settle at 100. And if it doesn't, it settles at 0. That is why it's a binary option. It's a yes or a no. And in the end, it's an all or nothing proposition. It either goes to 100 or it goes to 0. That is why it's binary. It's a choice. And I think people are also pretty familiar with that kind of concept. There's a lot of things like that out there where you can take a prediction or a proposition and it's either a yes or a no. And the price that you're trading, and this is kind of helpful to think about it, when it's trading between 0 and 100, the actual price that you see in the marketplace and that you can trade on can roughly be thought of as the probability of the event being true at settlement. So if something is trading around a 50 price level, it's probably right at the strike price level, also called at the money. And it means there's a 50-50 proposition on whether it's going to be true or not. It's basically even money. Even money. I can bet 50 and it might go to 100. So I could bet 50 to make 50. Or I can place a prediction Let's say I don't think it's going to, I could sell it at 50, but it's either going to go to 100 or 0. So your risk reward would be even. If it's trading at 75, that's the market pricing the probability of the event being true. That means the market is saying there's probably a 75% chance this is going to be true. And I will show you, but there you would, you could buy it at 75 to potentially make 25. And if you don't think it's going to be true, you could sell it at 75, and there your risk is only 25 because it goes to 100. You sold it at 75, but your profit would be if it went to 0. So we're going to go through that. I'm going to show you, but essentially what you're trading is the probability of the event being true. Okay, and just like other options that you might be familiar with, the further out in time, there's going to be that is factored into how the market prices these things, how much time is left. And I'm going to walk through an example, and you're going to watch this happen in real time. And volatility as well. If things are really, really quiet, that'll be priced into the probabilities. If things are very hectic, that'll also be priced into the probabilities. All right, so that's an introduction to binary options. And again, I am going to go to the platform and show you. As I like to say, my mom is from the great state of Missouri, or as they pronounce it, Missouri, the show me state. I find that if I show you, it makes a lot more sense. And again, if you've got any questions, type them into the questions box, and I will try to answer them as I go. But right now, I just want to tee up the concepts. I think when I show it to you, it'll make a lot more sense. Now let's quickly define knockouts. These are our two core products. A binary option, it's a yes or no, all or nothing proposition that either goes to 100 or 0, and you're trading, the number you're trading is the probability of the event being true. When we go to knockouts, it's a little different. A Nadex knockout is a contract that has a specific price range defined, right? And that price range has two price levels. And I'm going to show you, but the two price levels, the lower price level is called the floor, and the higher price level is called the ceiling. And the contract itself, the price of the contract, will trade between the floor and the ceiling. Now, the interesting thing here is that the value of the contract is going to move roughly in line with the underlying market. So what you're actually trading is the price of the underlying market. So no longer are we trading probabilities. Much like you trade anything else, you're actually trading the price of the underlying. Do I think gold is going to go higher or lower? If I think it's higher, I buy it. If I think it's lower, I sell it. But with a knockout, I have this floor and ceiling as parameters around my trade. Okay, so a knockout is what we call a delta 1 product, meaning it's going to trade right in line with the price of the underlying. And it's just like anything else. If you think it's going up, you buy. And if you think it's going down, you can sell. You can sell it even if you don't own it. You can sell it looking to profit if it goes lower. Now, a knockout is going to expire in one of two ways. Way number one is if it touches the floor or ceiling. If it touches either the floor or the ceiling, that contract is going to immediately settle and everyone will be knocked out of the trade. That's why it's called a knockout. If someone buys it and it touches the higher level, the ceiling, you would get knocked out for your maximum profit. If you bought it and it went lower and touched the floor, you would get knocked out for your maximum potential loss, but you're knocked out of the trade. You can't lose anymore. It can keep going lower. It can keep going lower. You can't lose anymore. You know exactly what you could potentially make or what you could potentially lose when you enter the trade. So that's way number one, is if it touches one of the boundaries while the contract is still trading. The other way is by time. Let's say it just stays in between the floor and the ceiling and never touches one of them. It will settle at a price at expiration, and then your profit or loss would be the difference between where you bought it or sold it and where it settled. Okay. And the one thing I want to cover before I get over to the platform, and this is really important when you're trading both binary options or knockouts. As you notice, there's a time settlement for all of it. But just because there's an expiration associated with the contract does not mean you have to wait until expiration to see what happens. You can always choose to exit your position early to lock in profits or limit losses prior to expiration. So you can trade these contracts uh, throughout the day. You can day trade them if you like. And if you're curious about that, there are no day trading rule restrictions. You can buy and sell as much as you like through the course of the day. Right, so you can trade these contracts. They are a very tradable product, and because of their size, they're designed for retail traders who want to speculate in the markets and take risk, looking for opportunity, and you can trade them throughout the day, throughout the week, but they will eventually settle. All right, that's my part with the slide deck. I wanted to spend 15 minutes and put these slides out there. Again, we're recording the session. If you've got any questions, type them into the question box. I will try to get to them throughout the presentation, or I will visit them at the end. Now, before I jump over to the platform, Nadex is here to help you. We really want to help you, and we try to make ourselves available. I would recommend, if you're having any challenges, questions, concerns, email us, customer service at Nadex. There's our email address. You can email us. At the bottom of the page, we've even got how you can connect to us on social: Twitter, Facebook, Instagram, YouTube, and LinkedIn. And I would recommend follow us, particularly if you're interested in educational content. Follow us on YouTube. Subscribe to our channel. We put all of our video content out there. This session will eventually be out there. And then any announcements the exchange has got going on when we're promoting other educational events. If you followed us on Twitter, Facebook, Instagram, or LinkedIn, and as I teased up, that Daily FX Virtual Education Summit that is totally free, a 3-day event that's going to be coming up. You follow us on our social media, you'll find out when that's going to occur, and you'll get to see the full agenda. I'm pretty excited about that one. It's going to be a great event. It's shaping up very nicely. All right, with that, I'm going to quickly check. I think I've hit the questions that have been asked so far. And again, I'm going to encourage you, if you want to ask any questions, put them in there. I am now going to jump over to the platform, and I'm going to show you. Like I said, I think it sometimes really resonates when we actually show you. Okay, there we go. So I jumped over to our website. And before I log in, I did want to show you a couple of things. One, under the learning section, there are webinars. In our webinar section, you'll see all of our upcoming webinars. I think I've got to add a couple more out in October, but you can always register for those now. And in the archive, this is where you'll find all of our recordings. The recording from yesterday will make it up there shortly. I know that it's been put through, but it takes a little time for it to process. The other place that you can go to, again, go to YouTube, look for the Nadex YouTube channel, and subscribe. You'll find it all there. And in our learning section, there's plenty of content here as well. If you're looking for short, quick, little fast platform tutorials, we've got a variety of those here. Plus, there's articles, and we constantly put out, at least about once a week, blogs where you can learn more about what's going on at Nadex. So I always like to put that out there. The last thing I would want to point out before I jump over to the platform is we also have this cool chat functionality that you can chat. So you can either do it through email or you can do it through chat, but we are here to help you. So one of the best ways that we can help you is if you reach out to us. All right, let's go ahead and log into the platform and start looking at some of these knockouts and binary options that we just kind of went through the definition of. All right, if you haven't seen our new platform, this is our new platform experience. We are encouraging everyone to use the new platform. I think the functionality, particularly our charting functionality, which I will share with you, is much more robust than our old platform. Now, to be fair, if you really, really love our old platform, you can still access it. That is going to get sunsetted at some point. So you probably have a few months before you move over and migrate to the new platform. I know people hate change, but we are trying to do our best to make the new experience as efficient and as optimal as we can for you. I will tell you that the technology for the new website and the new platform is much, much faster than the old platform. That's part of what we did is we invested in infrastructure and technology. And if you've got any feedback for us, please provide feedback either in the feedback button in the left-hand corner of the platform or in your account section. There's even a feedback button here as well. We love all feedback. All feedback is seen. All feedback is read. And while we love to hear positive feedback, everyone loves positive feedback. If there's things that you think we could be doing better, we are all ears. Please share. All right, now let's get into binary options and knockouts on the platform. As I mentioned, if you'll notice on the left-hand side of the platform, you've got this panel where you've got our products, binary options, knockouts, and I will touch on call spreads briefly later. But under binary options, our indices, foreign exchange, commodities, and as I mentioned, we've got very short-term contracts. We've got 5-minute contracts. And in fact, I'm going to walk through one of those. Those are all in foreign exchange pairs. And I think it'll really help you see what a binary option does. 20 minutes, those are in indices. So let's go ahead and I'm just going to bring up as an example an index option. Here's the US Tech 100, the NASDAQ. And let's take a look at the daily. When I click on daily, I'm going to get a variety of different strike prices. And when I click on a strike price, I will populate my chart. Okay, I'm actually going to move that panel over and let's make the chart a little bit bigger. Something just happened in the market and wow, we just sold off, didn't we? Right when I started this webinar, and let's go ahead and move this down. We can really see the chart here. I can zoom in or zoom out using some buttons. You can also, you can see how the NASDAQ really rallied, and you can set your parameters for your chart. I can set it as a daily chart that's only got 3 minutes. And you can set the parameters that you like. Now, as we continue to sell off here, I would like to show you what you're trading when you trade a binary option. And I'm just going to pick a strike. I'm going to pick this one here. It is the for the NASDAQ, 11,864. And you'll notice that this is what we're trading. Will the NASDAQ finish higher than 11,864 at the end of the day? And it tells you this expires in 3 hours. It's a yes or no proposition. And the probabilities right now, as the NASDAQ continues to sell down, you can see the probability of this is now around 30. If I looked at the middle of the bid-ask spread, now it's around 35. It looks like it just bounced. This is what I'm trading. It's a probability. If I think this is going to keep bouncing back, let's just say I want to buy one. So I'm going to buy one. Let's just go ahead and make it a market order and buy one. Okay, so I just bought one. And you can see that in my positions tab down here. And you can see, where I bought it and where it currently is. And I just bought it because I wanted to put a position on for you to see. Not a buy or sell recommendation, but I bought one of these around 49. So what did I do when I paid, let's put this back to GTC, and I paid 49.25. So let's actually put 49.25 in there, 49.25. What did I do? All right, I saw it was bouncing back up and I just wanted to buy one. I don't know what's going to happen. You can see it's right here at that price. Now it's coming down and you're seeing the probabilities change. When it's right here at that strike level, this trades around 50%. I paid a little less than 50%. Okay, look at it, it's bouncing right back up. Now, because a binary option is worth 0 or 100, all right, I know getting into it because I only bought one. When I paid $49.25, that's the most I could lose. I paid $49.25 and it could go to 0. If it does not settle in this blue area, it will go to 0. All right, if it settles down below, and that's the most I can lose. If it stays above this blue area, my maximum potential profit is 50.75. There we have it. I risked 49.25 to potentially make 50.75. Okay, so yay, I made a good trade. Now, do I have to wait until expiration to see what happens? No, I don't know what's going to happen. And if I wanted to, I bought it at 49. Maybe I'd want to make a quick $20. I could offer it at 69.25. There we go. And I can place my order. All right, now it sees that I placed an order, and you can see that I placed an order in the market at 69.25. And I'm willing to say, hey, you know what? I'll take my quick $20 if that's what happens. Wonderful. So the point being is I don't have to wait. Now, if I think it's going to keep going higher, I might not want to sell it at 69.25. I might want to let it go to 100. It's all your opinion. You can make a determination. It will either settle it'll settle at a time, but you can get out early if you like. If there's any questions around that, please type the questions in. I wanted to show you an example. On the same side, maybe I see it's actually coming back down. If I really just wanted to get out, I could just sell it and get out and take my profits. Let's take a look. I want to take a look at a different example. Let's move higher. I want to show what some other people tend to do. Let's say I think it might bounce back, but I don't think it's going to get above 11,936. I'm thinking, yeah, this is going to come back up, but it's not going to get above here. Maybe I want to sell one. And let's go ahead and take a look what would happen if I sold one up here, and let's just use a middle market price 22. Let's go ahead and place, let's make it, as it's ticking higher, let's make it 23. I don't want to accidentally sell it too fast. I want this order to go in. I'll sell this at 23. I'm going to place my order. You can see my offer there. Remember, this is not a buy, sell, or hold recommendation. This is a demo environment. Now, what am I thinking? If I were to sell one at 23 up here, this 11,936, that's the most I can make. I need it to settle in 3 hours and 16 minutes. I need it to settle below 11,936. If it stays in this red area, I'll make my $23. If it settles above there, all right, it'll go to 100 and I'll lose $77. Okay, and this is what people do. They kind of, I picked a level. What did I buy? I bought, let's take a look at my position. I bought the 11,864. And here, this is the one that I bought. Maybe I think it's going to settle above here, but below here, you can define and you can play. And remember, I make my prediction. Now it's selling back off. But I make my prediction, I can always get out of it. I mean, here we go. This is coming back down. If I decide I'm wrong and I just want to get out, I could just sell it and get out. Okay, I think I've gone through that pretty well. Let me jump over to, okay, looks like I've answered the questions that have come in. What I'd like to do with binary options, if I can time this right, is, we're actually seeing the market move pretty quickly right now. This is amazing that NASDAQ is making this fairly significant move in such a short period of time. And so you're getting a feel for how these probabilities change as the price of the underlying moves and as time moves forward. Now, this is a daily contract and it still has 3 hours and 15 minutes to go. So there's plenty of time for things to happen here. But you can choose based on the different strike prices where you want to you think it's going to happen? Yes, I want to buy it. Or no, I don't think it's going to happen. I can sell it, and you know what your risk reward is before you enter a trade. So let's take a look at this in real time in the 5-minute binaries. I'm going to pick the Euro US dollar, and I'm going to pick the at the money one here. And let's just expand this chart because this is the greatest way for you to really see how these probabilities change, because this has only got 4 minutes and 16 seconds to go, 4 minutes and 13 seconds. Okay, and I'm going to make this a daily chart with 1 minute. Okay, and let's spread that out so we can really see these strike prices. And if you want to learn how to customize your charts and move it around like this, there is a tutorial that can show you what I just did, and I can show that to you. But notice where the euro is right now. It's dropping below this 117 level, and look at how the probability on this is dropped. It's now the 117.95 is just gone through. It's now less than 50. Okay, this was the lowest level when we first started. These probabilities, remember, everything is either going to go to 0 or 100. As this continues to drop lower, notice that the other strikes are all headed towards 0. The probability of these happening are unlikely. If you wanted to, we got 3 minutes here, and you thought, hey, I can, maybe make a quick couple of dollars. Maybe I want to sell one of these at 18. Okay, and I'm going to go ahead and sell it. I don't know if that's, I just did. As it's rallying back, I mean, maybe I made a bad choice. I risked 18, look at that, and it's just blew right back through. And that one that I sold at 18 is already trading up at 78 as it quickly rallied back. Now, if I decide I'm wrong and I don't want to lose all of it, I could I'm going to go down here and click on this, buy it back. Okay, and I just bought it back, took my losses, and took my lumps. All right, so let me just take a quick look here because we did get a question. Why don't you have the 20-minute duration? And that is a good question. I don't know. You should, if you're using the new platform. If you go to, actually, I'll show that in a second. I want to jump back over to this example here as we have 2 minutes to go. I mean, you can see how the Euro US dollar has rallied, and the one that I sold earlier is now, and I bought it back, is now nearly 100. And these ones that were all nearly 0, you could have had all these for, less than 10. This one, it's right at the money here at 118.01. And you could see that it's trading right around 50.50. This, you can see the dynamics of binary options on how the probabilities move, and they move very quickly between 0 and 100, and you do get a great feel for how these can move close to 100 or close to 0 when there's less than 5 minutes to go. This is actually why a lot of people will trade out of their position before settlement, because they don't want to have that volatility and end up turning a winning trade into a losing trade in the last few seconds, because it can be very dramatic dynamic moves because everything has to go to 0 or 100. And it's important to note that if you want the excitement of that volatility and the price movement, 5-minute binaries may be for you. And you can watch. This is now, as we get down to the last few seconds, the prices are going to disappear. And I just showed that to you in the last 20, 25 seconds. And the reason that is because everything's going to go to 0 or 100, nobody wants to take the risk. It's just too much risk, which is kind of crazy. If I wanted to trade, I could place a trade. I don't know if someone's going to trade with me. Remember, this is a demo environment. But as we watch, this is the settlement. 2 seconds, 1 second, this thing just settled. All of these 118.01s went to 100. And look at that, it came right back down through it. But these settled at 100. And the new ones launched, and it's right here at 50.50. Okay, so right away, the new contracts launched, and now you see there's 4 minutes and 42 seconds, and you've got a whole new set of probabilities. Okay, so hopefully that answered your questions on binary options, on how they trade. It's a probability between 0 and 100, and that's what you're trading. And there is opportunity. You can do it if the volatility is too much in 5 minutes. If you don't see this 20-minute option, which are all indices, I would just reach out to our customer service email. I can't imagine why that doesn't make any sense. You should see that if you're using our new platform. Let's open this back up. Okay, and I am going to point out, we've got weekly settlements, daily, and then there's hourly choices. So you've got 5 minutes, 20 minutes, hourly throughout the day, daily and weekly, and you just can take a look at each one of the products to see the different settlement times and the different settlement strike prices. Okay, and by clicking on any one of the products, you'll populate the chart. Now, one thing I do like to point out, some new functionality on these, is I can tear off my charts and I could tear off my order tickets. And if you happen to have multiple screens, as a lot of traders do, you can put a chart for commodities on your left screen with an order ticket next to it. You could put a chart on your right screen for some indices with an order ticket. You'll have your platform in the center, and you can have a different chart and order ticket. So we do try to make it as convenient as possible, so you don't, if you're watching multiple markets, you can trade multiple markets on a multi-screen format. I am doing this webinar on just one screen, so I'm jumping around from product to product. All right, next I'd like to show you our knockouts. So knockouts, to me, knockouts tend to be a lot more intuitive. And I say intuitive because it is a Delta 1 product. I'm not trading probabilities. I am trading the price of the underlying. Here, let's just take a look at commodities. I'm going to take a look at gold. It's been pretty hot lately. Gold, I think, might be down on the day, but let's just take a look. Notice there are always 4 knockouts. Okay, I'm going to pick any one of these to populate the chart. I am now going to hide that panel. I'm going to hide my positions. Now, when you're trading a knockout, you are trading the price of the underlying. And we do show you all 4 knockouts on your chart. That is why I didn't care which one I chose. If I click on any one of these, it will build the knockout levels for me on my chart. So if, for instance, I thought gold were going to go higher, okay, this might be a knockout that I like. It's got my floor. It's got my ceiling. Now, what am I trading when I trade a knockout? Let's go ahead and click buy. Oh, wait, I wanted this one. And let's click buy. Sorry about that. Okay, so I clicked buy on the chart here. So I'm actually populating this one. It's the 1922 to 1972. It's a 50-point spread. And this knockout, now instead of a $100 contract, and it's all or nothing, binaries are either 100 or 0. A knockout, most of our knockout contracts are $500 spreads. I think the Nasdaq is 600. And when I'm trading these, again, as I mentioned, you'll get knocked out. If I were to buy one here at 30.80, let's just say 1931. Let's just put 1931 as a nice even price, right between the bid-ask spread. And I'll go ahead and I'll place my order. And you can see, yay, I've got a bid in here at 1931. My order was received, and you can see here's my order down here. Okay. I'm trying to pay 1931. It's just an order in the market. Now, if I were to buy one here at 1931 and I were wrong, and gold were to go down to 1922, which, by the way, it traded earlier in the day, if it touched 1922, I would get knocked out of the trade. I would get knocked out and I would experience maximum loss of $90. Right. Now, if I were to actually buy one at 1931, and it looks like it's, I think I did. In fact, it did trade. There's my position. There's the one that I just bought at 1931. Okay, it's going down a little bit. But remember, I was predicting that it was going to keep going higher. If it were to go higher, and this has got 1 day till expiration, this is a weekly settlement. If it went up to 1972 and touched 1972, I would get knocked out of the trade. I would experience maximum profit of 410. So with this knockout, I am risking 90 to potentially make 410, assuming it made it all the way up to 1972. It's got to make it all the way up there in the next day. Now, if it does not, I paid 1931 for it. If it does not touch in the next 1 day, if it does not touch 1922 or 1972 and it just trades in this range, it will settle. And my profit or loss will be the difference between what I paid, 1931, and the price that it settles at. So if it settles below 1931, I will experience a partial loss down to a maximum potential loss of $90 if it touches 1922. On the flip side, if I paid 1931, if it were to go back up and never make it to 1972, I would have some type of partial profit with a maximum potential profit of $410 if it went to 1972. And if it went above 1972, I could not make any more. I can't make any more than $410. That's the maximum. That's where I would get knocked out and the trade would settle if it touched this. Now, what could happen, to be fair, is it could come down here, touch 1922, I get knocked out of the trade, and then it goes higher. And that's a risk, but I knew that risk going into it because I also know that if it were to drop below 1922 and it went down to 1900 or lower, I could not lose any more than 90. So what people do is they choose a knockout that fits their risk reward profile a little bit better. If I thought I was playing a little too close with fire here with the 1922 knockout level, I could potentially choose the next level, which is a 1912, 1962. And if I were to buy one here at 1931, let's use the same price just so we can compare apples to apples. Here, if I bought one at 1931, I've got a little bit more. I mean, if it went down to 1922, I wouldn't get knocked out. I wouldn't get knocked out until it went down to 1912. But my maximum potential loss is now $190. And if it were to rally, my maximum potential profit is only $310. Okay, so people choose. Now, if I thought gold were going to go lower and I wanted to sell it, you might choose one of these other knockout levels. Maybe here you'd want to sell this one. I think gold is going lower. I think it's crazy that it rallied up here. And here, if you were to sell one, and let's just say 1931, because that's just the price that we've been using, here I could sell one, and if it went up to, and now I'm going short. I think gold's going lower. I think, no way, this is crazy, gold's going lower. Not a buy or sell recommendation, but if that's what you thought, you could sell one here at 1931. If gold were to go lower and it went down to 1892, you'd get knocked out and you could make $390 on one. But if you sold it and it went higher, whoops, you were wrong. You really didn't think it was going to do that. You're stopped out at a loss of a maximum loss of 110. So you're trading the price of the underlying. I buy it if I think it's going up. I sell it if I think it's going down. And I have very distinct knockout levels for either minimizing losses if I'm wrong, or looking for a profit if I'm right. And again, You don't have to wait until settlement to unwind your position. If you've got a partial profit, you can always choose to take your partial profit and make another decision. Or if you're wrong, you don't have to experience maximum loss. You can always unwind it for a partial loss. So hopefully that made sense. Now, someone's asking, is that kind of like a straddle? Not exactly. If you're not familiar with other options, a straddle, you are looking for it to make a big move one way or the other, and you've got unlimited gains or unlimited losses. Here, you've got, you know what this is really more is like, is what I'll call it a one cancels other, an OCO order, where you put on a trade and you put in your profit goal. All right, so you put a trade on and then you put your exit strategy. Where do I want to get out for a profit? And you say, that's where I'll get out for a profit. If I sell it, I would buy it back at a lower price. Where is that? Put your price in. But if I'm wrong, I want to have a stop loss that protects me if I'm wrong. And vice versa. Let's say I buy it and it's, let's actually take a look at my actual position. Okay. So, nope, let's click on my positions. I didn't mean to open up that. I wanted to open my positions. Here's my position in gold. I bought it at 1931. Maybe I did buy it. Maybe my exit strategy is to sell it at 1950. So I could put an order to sell it above at 1950. All right, I could absolutely do that. I placed my order. I'm offering to sell my position. There's my order. If it went up to 1950, I'll get out. I did buy it at 1931. I'd sell it at 1950. So you can put an exit strategy in. I don't have to wait for it to go up to 1972. I already have a stop loss at 1922. Right? If it touches that, I would get knocked out. And then if I can always choose, if I'm wrong and I want to unwind, I could just sell the position out. This is where I'm going to use an analogy. And I hate to, sometimes I'm a little leery to use it, but because, I don't want to equate investing and trading with gambling, but there's a reason why people lose money when they go to Las Vegas. And the reason people lose money when they go to Las Vegas is because they'll go there and they'll say, I've got $300 in my pocket. And if I lose $300, I'm going to stop playing. So they have an exit strategy, a stop loss, but they haven't set a profit goal. They don't have a profit goal. And let's say someone goes with $300 and they're playing, and next thing you know, they're up $300. What do? They usually put their original $300 back in their pocket and say, hey, I made $300. I'm going to play with the house money. And they'll keep playing, and invariably they'll lose that $300. And what do? They go, well, I said I was going to keep playing, and I would stop when I lost 300. They take the $300 back out of their pockets, and they keep playing, and then they finally lose their $300 and they stop. That is playing until you hit your stop loss. You should also have a profit goal, an exit strategy. With a knockout, you have an exit strategy. You have a strategy where you're going to take your profit, and you have a strategy where you will stop your losses. And you can always modify that a little bit. You do not have to wait until settlement or expiration. You can choose to exit early. And that's kind of nice that you've got those kind of controls around it. But you should always have a profit goal when you get into a trade, just like you have a stop loss goal. It's important to manage your risk. Now, there is a question. If you want to take a partial profit, do you have to use a limit? And the answer is no. If this, right now it's traded lower, but let's say, for example, gold were started trading and we see the indicative price is 1930, and you can see how it's trading around, right around the indicative price. If gold were to trade 1940, 1940. So it's just $10 higher. I could sell it at the market when it was up at 1940, and I would just be out of my trade. You do not have to use a limit order. I used a limit order because I was offering it all the way up at 1950, and it's not anywhere near there right now. But if I were to walk away from my screen or take a break, go get a sandwich, get a cup of coffee, and it were to go there, it would trade for me. So I use the limit order above, but you can absolutely at some point use a market order. In fact, if I wanted to use a market order right now, I could get out for a 20-cent profit. Not going to really do me any good, but I can liquidate the position with a market order to either sell it and get out, much like I did with that binary option trade. I sold that binary option at 18, and then it took off, and I put a market order to buy it back, and I bought it back around 70 something. Eventually, it went to 100. So you can absolutely use market orders when you're getting in or out of a trade, or you can use limit orders when you're getting in or getting out of a trade. Your choice. All right, so hopefully, again, if you've got any questions, type them in. We went through the definition of a binary option. You're trading probabilities, and it's an all or nothing, 0 or 100. We went through the knockouts. It's a delta 1 product. You're trading the actual price of the underlying with distinct knockout levels to either take profit or limit losses. All right. Either way, you can sell or you can buy. And just like with the binary option, I could sell it or buy it. You can trade out of your position before settlement. You do not have to wait for settlement. You can day trade these if you like. You can get in and out quickly for quick profits or quick losses if you're wrong. Hey, I did this and I'm wrong. Get me out. And you can take your partial losses. It all depends on what your trading strategy is. I would like to now show you some of the tools. I know we're a little bit over, but we do have some pretty cool tools. Again, we've got some sessions on these. There are platform tutorials. My colleague does platform walkthroughs that we've also got out there, so you can take a look at those sessions. But we have built out some pretty robust technical indicators. If you're not familiar with any of these technical indicators, that little eye icon, we have dynamic in-platform education where you can read or learn about each one of these types of indicators. It'll start you off. It might not be enough if you don't know everything about it, but it will be enough to give you a taste or a flavor of what this indicator is and what it's intended to measure. How you use those indicators is going to be up to you. And I'm just going to give you an example here. Bollinger Bands. If I want to, what did I just click on? Oop, hold on. I did Bollinger Bandwidth. I want Bollinger Bands. The actual Bollinger Bands, and let's make this a little bigger so you can see them. And if you want to change any of the parameters, you can. Our default parameters are in there. And this is about price movement, standard deviations, and it tries to give you indicators of when it's getting outside of a moving average range by certain standard deviations where it might be potential sell indicators, or down below might be a potential buy indicator. You've got to learn how you can use those, but you can turn these all on or off by simply clicking on them. The other thing that we've got are some really cool drawing tools here. In fact, I want to show you, hover over it for a second. Drawing tools, where you can customize your charts however you like. If you wanted to put in your own support and resistance lines using horizontal lines, or if you see patterns forming in channels. In fact, let's kind of do this. Let's go ahead and take a 1-week chart of gold. Let's move it down to 15 minutes. I'm going to slide this over a little bit. Let's just make this chart a little bit bigger. You can zoom out by scrolling in or out. You can adjust your chart by clicking and dragging over here on the prices. I am allowed to have my price levels on my knockouts right here on the chart so you can see. And let's just say I wanted to put in, I could see Gold's been trading sideways, but you can clearly see in this last week. Let's zoom in a little bit. It's been, it's got very volatile, spike up, spike down. It's kind of been a little bit of a downtrend here, right? Outside that anomaly. If I wanted to, say, put in my Fibonacci retracements, again, if you don't know what they are, there's a little indicator here. They're statistical, their probability moves based on a ratio. I'm just going to click on this Fibonacci retracement. And the way it would work is if I thought it was in a downtrend, I'd click at the top end in the upper left. I'd kind of do my trend to the lower right. And it gives you certain support and resistance levels that, hold true a little bit. This was a bit of a support. This was a bit of a resistance back in here. I mean, obviously outside of this big spike up and this move down, but it has actually identified levels where you tend to see support and resistance. This level right here, 1931, is actually a level. Oddly enough, right there on the chart. Is this going to be support? Right now it's resistance. And according to Fibonacci, if it can actually get through this level, you would maybe see it come back up to this level, which it did earlier, the 1938. And if it were to make it through that, you might see it make it up to this 1942 level. And if it can't get through this level, you would expect it to see it come back down all the way down to 1920, which it did earlier in the day. Kind of interesting how if there's enough people looking at these sometimes these can be a little bit of a self-fulfilling prophecy, but some great drawing tools and great indicator levels. Once you customize your chart, I can right click on it and I can even save the layout, and I can then save that layout. Let's call it Todd Fibonacci. Or Todd Fibonacci, and I could say it as save it as Todd Fibonacci. Oh, did I actually? You know what? Did I erase my Fibonacci? I did. I didn't mean to do that. I could draw it back on here, and then I could right-click on the chart, and I keep on deleting it. But you can save your layout, and then you can bring it back. I know I have gone over. Let me take a quick look over at some questions. All right, so the question was, yes, this is actually a great question. This is on binary options, and let's jump back to binary options. I love this question. Let's go to indices. Let's pick an index, any of them. Oh wait, I'm picked on binary options, indices. Let's pick that US Tech Daily, okay? And the question is, and here, let's pick this one because this was the actual question. If I traded this binary option right here, let's pick this 1984 one. Okay. Let's say I were to buy this one for 22. Okay. All right. So what am I doing? I were to buy this. I need the Nasdaq, the US Tech 100, to settle above 11,984 in the next 2 hours and 46 minutes. If I were to buy one for 22, I'm risking 22 and I could potentially make 78 because it went to 100. Now, if I were to buy it for 22, and let's say it went up and I were to sell it, and it started trading 88. Okay, it hasn't gone to 100, it's at 88. And I could sell it at 88. What would my profit and loss be? Well, if I bought it at 22 and I sold it at 88, it went up 66 points. My profit would be $66. I could profit $66. The most I can make would be $78. That's because it went to 100. And that's the 22. It goes to 100. I make 78. So would I sell it at 88? Maybe, because I would, making 66 versus making 78, that's $12, but maybe I would be happy to make $68 or $66, I apologize, instead of waiting for the whole 78 in the concern that if I bought it and it actually went up there and above there, that it stayed above there before expiration, because there's always that risk that yes, it goes to 88, but then as it gets close to the settlement in 2 hours and 44 minutes, something happens and it drops below that level and it goes to 0. And when we did that 5-minute binary example, you saw how quickly those probabilities went from 0 to close to 100, back down close to 0, back to above 100. And in the end, every binary option will either settle at 100 or 0. That's it. There's no other in-between choices. So sometimes people will choose to lock in their profits when they have. And again, you can do that with binary options. You can do that with knockouts. And conversely, you can also minimize losses. I do not have to experience maximum loss. If I were to sell this one at 22, all right, saying I don't think it's ever going to make it above here, so it has to settle in this red zone, and I were willing to sell it at 22, I can only make $22. It goes to 0. I could lose 78. But if I sold it at 22, just like that example I did earlier, and next thing you know, it's trading 60 because it's trading above this level, I could just buy it back and experience. If I bought it back at 62, I would only lose $40, right? Because I sold it at 22, bought it back at 62. I lost 40 instead of waiting to lose all 78. You can limit losses or take partial profits by exiting a trade early. With that, I do want to say thank you so much for joining me today. I hope everyone is staying safe and sane during these crazy times. Not only do we have COVID, I know that there's some craziness going on in the southern parts of the United States with these hurricanes. My own son happens to be in New Orleans, and they were fortunate enough to dodge these bullets. But for anyone who's down in Texas or Western Louisiana or with family or friends, I truly hope that they are safe. Or if you're out in the West Coast with the fires, really, I don't explain what's going on in the world. So I do hope everyone is staying safe. We will not be doing any live webinars next week. Please check out our recorded content under the webinars section of our website, or go to our YouTube channel. And this recording will be there. The last thing I do want to bring back up, and there is one more question, which I will get to. I'll take a look at that question in a second. I want to encourage you, if you want to contact us, reach out to us at customer service, find us on social media. And the other thing I want to point out, I didn't mention this earlier, this Trust Pilot, give us some reviews. Again, put anything. We love positive feedback. That's great. We also love constructive feedback. We want to make the trading experience better for you. Please go to this trustpilot.com/review/nadex.com. I would really appreciate it. All feedback is greatly appreciated. And leave it for us regularly. Whatever you've got, anything you'd like us to be doing, anything that we can be helping you on your journey, please, we take all feedback very, very seriously. With that, thank you again, and I want to wish you all good luck in the markets.